Hey guys, this is Market Update. Things are looking so good for Bitcoin right now. Any weakness has to be bought in this part of the Bitcoin cycle, in my opinion. A long way to go for this cycle. Look, this isn't a drawdown, right? We're 15% off the all-time highest price, literally over 100K traded. It's just the most bullish environment ever, right? And there's a long way to go, in my opinion. I'll show you why in this video. But look, the normal drawdown for this cycle, right? Absolutely insane performance, up 500% from the lows of this bull market. 20% drawdown or so is very likely. This was the biggest drawdown here we had, which was 29%, 30%, something like that. These are levels if you're looking, right? We have a big support level around this level, which we're bouncing from again today. Maybe we break it, maybe we don't. The dollar is pretty strong right now, and I think this is a negotiating position. No one really wants a strong dollar, especially America, right? They want to weaken this thing, and I just think that is the bull market coming for the next, 6-12 months or so. But look, this is a 15% drawdown. This is the support level. We may get to these levels. A typical drawdown for this cycle would be 20% or so. That's 25%, brings us down to 80. 20% drawdown is kind of 85 region. Absolutely could get there, right? And I really hope we do, because wow, we just need to buy this asset. It's the strongest asset. I'll show you why. The dollar's pretty strong. You can see that here. When the dollar is strong, you tend to get a bit of weakness in Bitcoin. Good, because it is not normal for the dollar to be strong, right? And stronger and stronger and stronger. Nobody wants that, okay? It's a debt-based system. It has to get weaker over time. So when it's strong, negotiating, tactic from the States, whatever, that is the time. You have to take advantage. We need to accumulate this asset. This is not the time to trade or sell this asset. We're in the accumulation phase. It's going to happen one time in our entire lifetime. This is it that we're in. Accumulate as much as you can when there's weakness. This is great news. This is bull market peak indicators from CoinGlass. Just look at these X's. There is not one single bull market peak indicator that has topped. None of them. Not one single bull market peak indicator that's been hit. Okay, this is not the peak of the bull market. We have to buy any piece of weakness. This is 2024 performance. Bitcoin down at the bottom, 120%. Bitcoin volatility is good. If you're young and you can handle it and you have an income, make sure you buy when there's any weakness, because by the time you've bought it for a period of time, right? And I implore you to just dollar cost average thing as much as you can for the next 12 years, okay? 12 years doing this. The volatility to the upside is so amazing that any drawdowns you get after you've been dollar cost averaging for 4 years are completely irrelevant. People are saying, well, it's volatile. It's going to draw down 50%, 60%. If you've been buying this thing for at least 4 years, a 50% drawdown is irrelevant because you've made so much money, right? That a 50% drawdown literally is still outperforming all of these other things. I implore you to get into this asset. This is a large scale, accepted worldwide asset. The absolute insanity of these performance returns, right? You have to get into this. The market is pricing in far fewer rate cuts. The Fed yaps. We're going to have fewer rate cuts. No, you're not. You have this huge debt burden that has to be refinanced, and you have to get interest rates as low as possible. But you don't tell people that. It's all a game. This is a game. They have to manipulate the market to think that they won't cut rates. And then 6 months later, slam, rates down, refinance, create inflation. That's the next bear market, but we're in the bull market scenario. Do not get yapped by the Fed. Their job is to literally psyop us out of our positions. This is important if you're in Bitcoin, right? This is the Dow Jones here, valued in dollars. This is the Dow Jones valued in gold. Okay, so what this means is the vast majority of stock returns are not stock returns. It is just currency debasement. This is where most stock returns come from. Now, stocks are a great way to, defend yourself against fiat currency debasement. But when you value them in a proper currency, they are not going anywhere, especially these old companies that, don't produce any real growth. Valued in gold, they're down 61%. Valued in Bitcoin, it's like 99% down. So know what you own, and it's not about valuing anything in fiat currency. Fiat currency is supposed to debase. It's a debt system. So you need to value things versus Bitcoin. Bitcoin is the world reserve currency. It's already done. Our generation have Bitcoin as a reserve, not gold. Gold has 2% inflation, Bitcoin doesn't. Over 10 and 20 years, that is a massive difference, okay? You're looking at 50% difference just on the baseline, let alone any currency debasement. Actually, you can see here as well, if we go through to this one, right? This is Dow Jones versus gold. And you can see when it was, the dollar was, rebalanced versus gold, right? Revalued versus gold, right? And so minus 16% in gold terms. Dow Jones is up 50% in dollars, down 16% in gold terms. It matters what you value these assets against. This is Bitcoin versus the NASDAQ index, right? So is Bitcoin going to outperform the dollar? Yes, of course it is. But that's not even the thing you should be looking at. Oh, what if the price goes down? What, in dollars? It's going to go up again because the dollar debases. So you value it in gold. Gold's down 99%. You value it S&P, down 99%. NASDAQ, the best performing index. This is where we are right here. We're basically breaking out versus the NASDAQ again, which is a huge bull market, right? We are not topped out of this bull market. We're just getting started. And we know exactly what's going on. The dollar debases, 100% guarantee. When there's any weakness in risk assets, that is an opportunity. Our entire thing that we need to do throughout our lives is to defend against currency debasement. And you go into the asset that is perfect for that, literally designed for it, which is Bitcoin. And it has this growth and nothing else does. This is the trade of our generation. If there's any weakness whatsoever, you have to get in. This is not the time to sell. This 10, 12 years, that's it. It's going to happen one time. We have to take advantage. Otherwise, it's over. We've got no other opportunity, right? It's the best asset in the world and it's monetizing. We have this opportunity. If we don't take advantage, there's nothing else coming along within our lifetime that's going to be as good as this. If you don't have a Bybit account yet, the link below gives you up to $30,000 as a deposit bonus there. Whatever you deposit, you will get some sort of bonus. Not everyone can use Bybit. It's not available in every country. You can also trade on Apex, which is Bybit's DEX. You just connect your wallet. You can trade on here as well. You can trade futures and spot on here. But for more advanced users, if you do have a wallet already, you can go and check it out. Links below for 30,000 deposit bonus and fee discount on Apex as well. Trump has been very clear about what he wants to do over his term. There's just a major problem in markets right now, which is the US has to sort out its debt to GDP, but it can't do it economically speaking, right? Because this fiat system, the dollar world reserve currency system, is a blessing and a curse for them. They have to weaken the dollar. They have to weaken the dollar significantly and bring the economy back, bring manufacturing back, bring something back so they can sort out their deficits and then sort out their debt GDP a little bit, right? We're not saying bring it to zero, but they have to put this on a different path, right? And no one really knows how this is going to work. It's going to be very volatile, right? But essentially, they have to weaken the dollar. And if they weaken the dollar, that means asset prices go up. But remember, don't value those assets versus the dollar. Value them versus a true reserve currency, which in my opinion is Bitcoin. Interest rates are far too high, which he said this week. Last time he said something was too high, it was the dollar. You can see this here. Look, everyone wants a weaker dollar, right? And right now, strengthening dollar is a good negotiating position because you can weaken something from a position of strength. If it's weak already, weakening it further is not great. So you strengthen, right? That's the stick. The reason it's a stick is because everyone has debt dominated in dollars worldwide, other countries, corporates, etc. So you strengthen it, and then you say, look, we need to negotiate things here. We need to weaken the dollar. We need to move some manufacturing around. We need to bring some manufacturing back to sort out our deficit GDP, right? This is a blessing and a curse of the world reserve currency system. But no one wants a stronger dollar, therefore it won't happen. And if it does happen, markets start to break, and that gives them a great opportunity to say, hey, look, guys, do you want the market to break, or do you want us to print some more money? They're going to print more money, aren't they? They're going to weaken the dollar in any way that they can, swap lines, behind the scenes, etc. And so this is what I think. Weakening dollar, super good for risk assets, but make sure you're in the right one that has the ability to actually price this in. Bitcoin is literally specifically designed for this, and it has the most growth if you can handle the volatility. The problem with cutting deficit yourself, where you can't do that, right, is because if you try to cut the deficit within your own borders, when you run massive trade deficits, right, it means that essentially you're slowing the fiat economy, right? Not the economy itself, the fiat system, the way that you measure this, right? It's a debt-based system, so you need positive GDP and positive inflation. If you try and actually pay it off, what you create is negative GDP, slowing of growth. It's not growth, it's not economic growth, it's completely different to the fiat system. When you have GDP, when you try and pay it off, debt to GDP, when you try and pay the debt off or try and make people pay it more, you suck their purchasing power out. And so you actually create negative GDP or a slowdown in GDP and a slowdown in inflation. That's not good for a debt-based system. It will go negative if they do that. And so the last time this happened was Obamacare, designed to reduce US deficit to GDP by pushing the cost of healthcare from government to consumers. 14, 26, 38, 50 months later, US deficit to GDP was higher. The reason being is you try and pay off the deficit, and then you create a drag on economic data. And of course, your debt stays the same with the GDP and inflation side going down. You just make things worse. You can't pay this off. You cannot pay it off. You have to inflate your way out of it, which means you need a weaker dollar. You need to revalue the dollar. You need to weaken it. And you want to weaken it against a world reserve currency, a neutral currency. For example, something like Bitcoin or gold. But look, we all know it's Bitcoin, right? Gold is just absolutely irrelevant. And Bitcoin is outperforming pretty much everything, especially gold. Even though gold's had its best year, I mean, look at what's happened to Bitcoin as well. So you can't pay it off. You have to inflate and debase your way out of it. This shows the blessing and the curse of the US dollar system. So the US dollar is too strong and everyone needs it weaker. The US dollar is strong because everyone has debt denominated in dollars, and that means there's demand for this thing. There's demand for dollars, pushing the dollar up, making your economy weaker because you can't export anything. You can't make and export anything because your currency is too strong and your goods are too expensive versus other nations. So what does the US do? It has to print to make sure that the fiat system doesn't collapse, to make sure GDP and inflation are higher. It has to print money. It literally prints paper out of thin air and sends it over to Saudi to buy the oil and China to buy the goods. They're actually doing real work and producing things and sending them over to the States. Now they have dollars. Right now they have this paper, but paper is worthless and they know that as well. So what are they going to do? Well, they're not going to keep the dollars because the US, just a bunch of people in the central bank and the government, they can do anything they want with the dollar. Like in 2020 when they just printed 50% more of them out of thin air. And that's why you have wars, right? Because you, in these countries, work and produce all this stuff, this real stuff, and sell it. And then they just print money out of thin air for like 50% more in over a year. And you're like, well, you've just debased everything I've done. So you'd be a bit angry too, right? And so what you do if you earn dollars for actual work, you have to recycle them back into assets, which is why all of these countries are buying football clubs, farmland, and stocks. You can see that here. Rest of the world, foreign direct investment position going up, and so does the NASDAQ. And that's why the US markets outperform everything, because it's a world reserve currency and everyone else does work, gets dollars and recycles it back into those markets. And that's why they outperform. It's not because the economy in the States is doing too well. If you took the fiscal deficit away, that would be there would be a huge recession, right? Minus 10% GDP. It's because the economy can't do well because it can't export, right? So this is the issue. This is the issue we have. You need a weaker dollar to make some competitiveness in your economy so you can bring some manufacturing back, so you can try and sort out these deficits and debt GDP. But you have to have a weaker dollar for that. That's the blessing and the curse of the fiat system, is that the real economy in the States has been hollowed out because the dollar is too strong and you have to weaken it. And the only way you can weaken it is basically by printing it, which means you have to revalue it versus assets. And Bitcoin is specifically designed to go up the most on this scenario. This is it. This is the trade of our generation. We have to get into Bitcoin. If you do trade Bitcoin and crypto, check out Bybit. You can get a $30,000 deposit bonus on here. Link in description for that. If you can't trade on Bybit, check out Apex, which is Bybit's DEX. You just connect your wallet and trade on here. Spot and futures you can trade. Permanent fee discount as well by the link below. I'm James, this is Money DG. Cheers for watching, and I'll see you in the next one.